Hey there, this is Jody Clock, and welcome to my podcast, I Woke Up Dead, Now What? In our conversations, we'll talk about real issues that everyday people face should they wake up dead without a life after death plan in place. Join me as we explore the how-tos on preparing for you or your loved one's passing without breaking the bank. And let's not forget about those pets too. Now, don't you fall asleep. Today is a really passionate topic for me because I'm an old pre-need girl and I used to teach that on a regular basis. So I'd like to talk about you need to do the math before you prepay your funeral. Notice I said prepay versus pre-arrange your funeral. Two very different things. In a previous podcast titled, Are You a Consumer or a Commission? We touched on how funeral homes and prearrangement specialists target people through lunch and learns, and they offer a free meal in exchange for your time, your personal information, all while trying to sell the benefits of prearranging your funeral. They also focus on a hard sell of pre-funding your funeral. One of the primary points of this presentation, the pitch revolves around time payments. They focus on inflation, and they really play on the emotional side of placing a financial burden for those you leave behind and or your immediate family. I mean, let's face it, funerals, celebrations of life, whatever you want to call them, they're expensive. And even though they're expected, they're never expected. I mean, we all know there are two things certain, death and taxes, but we are never ready for either. So as we age, it's not uncommon for us to contemplate, the cost of a funeral. Rarely does anybody act on setting aside the money for their funeral expense. I kind of equate that to sorting your sock drawer. You know you need to do it, but you find 100 other things to do. At least I do. It's important to note that if an individual is currently if you're disabled, if you are on Social Security, if you're a veteran, especially if you're honorably discharged, the next of kin will still incur costs. Yes, there are some benefits, but not much. And as time goes on, it just gets less and less. So for those reasons I mentioned above, along with the vast majority of the population who are retired and they live on a fixed income, your pre-planning specialist is going to promote funeral insurance payment plans. In fact, in order to keep the payments small for those of you who are on a fixed income, they're going to focus on 5, 10, and even 20-year payment plans. Gosh, 20-year payment plans. Let's just think about that. If you're 60, it ends when you're 80. If you're 70, it ends when you're 90. Okay. The benefits that they're going to pitch, it's going to depend on what state you live in. But after a 2-year period, should death occur, the full amount of the pre-planned funeral is paid for as long as your policy is in good standing. So that just means as long as your payments are paid on a regular basis, your funeral is going to be paid in full. In other states who will not allow a complete payoff for your funeral, they offer a graded death benefit should you die within that 2-year period. I know that's a big fancy word, graded death benefit, but all that means is premiums will be returned plus interest. The other benefits are very small, affordable monthly payments. The cost of the prepaid funeral is locked in or /guaranteed at today's prices. Now that can be misleading. I want to be very clear. What is locked in at today's prices is the funeral home's service and merchandise, because that is what the funeral home can control in their pricing. Anything else like obituaries, death certificates, anything to do with the cemetery, unless they happen to own the cemetery, those are called cash advance items. Those are things that they cannot control other people's pricing. Payments are directly assigned to the funeral home. So what that means is when death occurs, the family gets the value of knowing that the funeral home got their money and they are paid directly, which is good for the funeral home. It can be transferable to another funeral home. So more times than not, it may be transferable, but not always. They're going to focus on the emotional peace of mind that you will get from making your plans and paying for them. They're going to tell you it's exempt as an asset for Medicaid. And I'd like to stop right there for a second. Pre-planning your funeral when you are trying to qualify for Medicaid is probably the strongest reason that someone should pre-fund their funeral. And finally, they're going to really focus on the financial burden of those you leave behind. How are they going to pay for that funeral? Even if you don't have any funds, they don't have funds, so they're looking for a prayer and a promise. Okay, so those are the benefits, and that's what they're going to focus on. But here's what no one explains to you. It's a math problem. There are so many variables that you must look beyond that initial payment. Here's a case in point. I'm just going to randomly throw this out, and I am going to ask you to go to my blog at jodyclock.com and read this blog post, because you're going to see a graph that charts out some of the numbers that I'm going to throw out. But these are actual rates from a pre-need funeral insurance company who is very well known in the Midwest, and they're very active with funeral homes. The rates and the payments vary based on the state, age, health status, etc. But think about it. This is funeral insurance. People are not young. The typical person that does that starts in their 60s, and that's considered young, but the average is between 75 and 80. So I'm going to split the difference. In this case in point is talking about a 70-year-old. The average funeral cost, if you go from coast to coast in the United States, in 2023, so as of today, is $8,107. The average person, I'm splitting the difference, is 70 years old. But if you're fortunate enough to live to be 70 years old, I'm not trying to kill you off here, and nor am I a psychic, but the actuarial tables, say that a couple of times, is 14.7 years. So that means that you're going to live to be at least 84 years. And as of today, the inflation rate is based on the 2023 amount of 3.7%. So basically, you got a 70-year-old who's going to prepay a funeral that costs $8,107. You've got a life expectancy of 14.7 years. And the story problem here is going to include an inflation rate of 3.7%. So for those of you who can't pay that basically $8,100 and they would rather pay overtime, for whatever reason, and understand I'm not saying making the choice to pay overtime is wrong. I'm just saying do the math. So in a nutshell, I'm going to just spout out some numbers. A 5-year payment plan would be $145 and some change. A 10-year payment plan is $82 and some change. A 15-year is $58 and change. And a 20-year is $52 and change. Okay. Now here's where it gets fun. The overall payments, if you live to the end of the contract for the 5 years, is $97,000+. The 10-year, this is a little eye-opening. That $8,100 funeral, you have now paid $11,658. 15 years, you've paid $13,981. And if you take a 20-year payment plan, you're looking at $16,766. For that 20-year payment plan, you have overpaid that $8,100 funeral by $8,659. That has more than doubled your initial cost of a funeral. If you're looking at the 15-year, you've overpaid by $5,800. I don't know about you, but I could find a better return on my investment. I could find better places to put my money. As you can see, if you live to be 90, you've more than doubled the original amount. You get my point. Now, to be fair, when people purchase insurance, there are embedded costs for the risks the insurance company takes on you. I mean, think about it. Again, funeral service. Okay? None of us are spring chickens. The risk factors, again, I'm going to focus on age, health, average life expectancy, but compound that with what the insurance company has to put in there. Their risk factors, they got to pay a commission to the agent, along with the overall cost of doing business. And that adds up quicker than you know. I mean, you've got claims, you've got your legal team, you've got customer service, you've got technology. Oh, there's so much. However, insurance companies sure like those time payments. In the big picture, it helps them with cash flow and budgeting. Think about it. The smaller payments usually mean happy agents. After all, agents can get people to sign on the dotted line because there are affordable monthly payments versus that one lump sum. There's going to be more cash flow coming in on a regular basis, and the more cash flow means more commission, and it's a win for everyone. So here's the downside of these time payments. In some states, should you move, you can't change your mind. What that means, for example, in Florida, if you prepay your funeral, it's only transportable to another funeral home in Florida. So if you go to Phoenix or Michigan or California, too bad, so sad. It's also not transferable. In other words, you can't gift the funeral, especially for funeral insurance is what I'm specifically talking about, to your spouse or family member or even a grandchild, specifically what people ask a lot, should they precede you in death. Oftentimes people are going to want to pay off their funeral early. While they have the best intentions, they usually miss that window of opportunity. So when they do calculate the premiums, they're always going to tell you and show you how you can do so many days same as cash or so many years same as cash. But there's a very small window. And if you miss that window, it just doesn't make sense to do it. So still looking to make time payments? There's another way. And I encourage you to do some due diligence on this. Ask about a funeral trust rather than funeral insurance. Let me say that again. I want you to ask your funeral home or your pre-need specialist about a funeral trust rather than funeral insurance. Now, if the first words out of the pre-need specialist's mouth is, well, I'm sorry, we don't do a trust, we only offer funeral insurance, that's a red flag right there, because that tells you that they are 100% commission-based, and that's how their decision can win. I mean, long before there was funeral insurance, there were funeral trusts. In a nutshell, a funeral trust is a contract between you, the funeral home, and where the money is invested with a third-party fiduciary. Basically, it's a bank. And our funeral home happens to use a bank that's a fiduciary in all 50 states. It is the only bank that's set aside specifically for funeral homes and cemeteries. So just think of it as a third party with a safe place for your money. The beautiful thing about a funeral trust is that the pre-planning specialist and you can set up a payment structure with or without interest. Again, there are state rules and compliances, but you can sit down and figure out what you can afford, and they can work into that. Now, there is a catch like anything else. Should you die before the payments are completed, that balance is going to need to be paid. So in closing, from someone who's taught pre-arranging and pre-funding for over 30 years, there are really only two benefits for pre-paying your funeral versus pre-planning your funeral. Okay, here they are. Listen closely. A prepaid funeral contract is considered exempt as an asset when attempting to qualify for Medicaid. All right, I said that earlier, and I can't say it loud enough now. It's important to know your state's contract limits. Some can go as high as $25,000, $30,000. Some are as low as $5,000. It's all in how that contract is written. And it's important your pre-planning specialist knows how to write this. This is a great way to protect your money and set aside money for not only your funeral, but your spouse's funeral. And if done correctly, you can do it for your children and grandchildren. However, please note, I am not an attorney, so it has to be written up correctly. Otherwise, one slight mistake and you can disqualify from Medicaid, which would put you in a world of financial hurt. So you really want to consult with your attorney, and you want to dial it down with your pre-planning specialist. The second benefit, I agree with this. It generally provides a roadmap for your family to follow, and knowing that it's paid for. Because this allows the family, okay, this is what you wanted. They're not overspending and underspending. And it can also save those family feuds. I mean, so many times you see a family divided. So if you have it down, more times than not, people will honor your wishes. So we touched on a lot of things, and I rambled a lot of numbers out there, but this is important stuff. So again, if you are going to prepay your funeral, really know your why you're going to do it, and then do the math. Do what works out for you, not what works out for that person who's paid on commission trying to get a sale. Because if the price is good today, it's going to be good 30 days, 60 days, and 90 days from now. Thanks for listening. And please go to my blog at jodyclock.com and look at the graph. It's pretty sobering. Thank you for joining me today, and I look forward to talking to you soon. Bye. Hey, if you're hearing this message, you've listened to the entire episode, and for that, I want to thank you, and I am so glad you didn't wake up dead today. Please jump over to jodyclock.com and download your free copy of my family care plan. This guide will help those you leave behind should you wake up dead. I promise. Be sure to order my book, It's Complicated, based on a true story. Send me an email about topics you'd like to hear in future episodes. Until next time, thank you for not falling asleep.